Dear students, in this video I'll explain you about the final accounts of banking companies. See, this is the format of balance sheet, vertical balance sheet, wherein we have three columns. The first one is particular, second column schedule number, and the third column is amount column. And the first part will take up capitals and liabilities. So under this, the first one is share capital, so which carries schedule number 1. We'll write the amount here. So before this, we have to show the working note for schedule number 1 and for all the other schedules too. Second one is reserves and surplus, schedule number 2. Third one is deposit, schedule number 3. Fourth one is borrowing, schedule number 4. Next one is other liabilities and provisions, schedule number 5. So with this, we'll get the total of the liability side. So under liability side, there are 5 schedules: capital, reserves and surplus, deposits, borrowings, and other liabilities and provisions. Asset side, so under this, the first comes is like cash and balance with the Reserve Bank of India, schedule number 6. Next, balance with the bank, other banks and money at call as well as short notice, so schedule number 7. Next one is investment, schedule number 8. Next one is advances, schedule number 9. Next one is fixed assets, schedule number 10, and the next one is other assets, schedule number 11. With this, we got the total of assets, and finally schedule number 12 is for contingent liabilities. So these are the items comes in the balance sheet, and this is the format of vertical balance sheet of a banking company. Now we'll discuss what are the contents of each schedule. We'll start from schedule number 1. Okay, schedule number 1 is capital. So here what comes is authorized, issued and subscribed capital. We'll write the amount in the amount column, and below that amount we'll put the underline because this is not going to be counted while finding the total of the balance sheet. Then comes is called up and paid up capital. This is the one which you are going to add up to other liabilities to get the total liabilities of the concern or like the bank. So with this, we get the total capital. This is schedule number 1. This is the way how you can prepare capital, schedule number 1. Now we'll move on to schedule number 2. So schedule number 2, reserves and surplus. So here the first item is statutory reserves. So as per the banking norms, it is compulsory for the banks to transfer 20% of their current profit to the reserve. So that has to be added for the opening balance of statutory reserve. So net amount of the total amount will write in the outer column. So next comes is capital reserve. So here also, if there is any addition during the current year, that has to be added, so that we will write the total amount outer column. Next comes is share premium. Here also, if there is any addition this year, that has to be added. Then revenue reserves and other reserves. Here also, if there is any addition this year, that has to be added. Next comes is balance in the profit and loss account. So this year's profit and loss account balance transferred to balance sheet, that is going to appear here. So that has to be written. With this, we will get the total of the reserves and surplus. Schedule number 3. Schedule number 3 is deposits. So here current deposits, fixed deposits, saving bank deposits, and recurring deposits. So these are the various types of deposits becomes a liability for a bank, so therefore it comes under the liability side, schedule number 3. So then we'll get the total of it. Then schedule number 4, borrowings. So it would be borrowings from inside the country or outside the country. Borrowings in India, these are the various types of borrowings from Reserve Bank of India, from other banks or from other agencies and institutions. And then borrowings from outside India, so we'll get the total. Okay, this is schedule number 4. Number 5, other liabilities and provisions. So in this we have expired discount. You know what I mean by unexpired discount. See, total discount received this year is 50,000. Out of that, 45,000 belongs to this year, and remaining 5,000 belongs to the next year. Yeah, so that is called as unexpired discount. That should be treated as a liability here. Then next comes is proposed dividend or unpaid dividend. And next one is provision for taxation. Next comes is rebate on bills discounted. Then travelers checks. Then sundry creditors, branch adjustment. So branch adjustment is concerned like a head office has many branches all over the country, for example, or in many places. In such cases, if there are some transactions which are not adjusted before the end of the financial year, such adjustments are supposed to be treated under bank adjustments. And if these adjustments have a debit balance, then it goes to the other assets, and if it is a credit balance, then it goes to the current liabilities. So next one is provident fund, and next one is draft or bills payable. Next one is interest suspense account, that is interest on doubtful debt. If there is any interest on doubtful debt, that should be treated as interest suspense account, so that we get the total of other liabilities and provisions. So now we'll move on to schedule number 6. Schedule number 6, from here onwards we have the current assets till schedule number 11. From 6 to 11 we have the assets. So cash balance with Reserve Bank of India, first one. So here cash in hand, then traveler's check paid, so that should be deducted, so net balance is to be written outside. Then cash with the Reserve Bank of India, then we'll get the total. Similarly, schedule number 7, balance with banks, money at call and short notice. So in this we have the first one in India, so balance with the banks in India, balance with the other banks, then money at call and short notice, and outside India again similarly. So we'll get the total. So these are the items of schedule number 7. So on to schedule number 8. Schedule number 8 is investment. So here different types of investment: investment in Indian or foreign government securities, investment in shares of India or outside, or investment in debentures and bonds in India or outside. Then investment in subsidiaries or joint ventures. Then investment in reserve fund, and investment in gold or other kind of precious stones. So then any other type of investment comes here, so that will get the total of investments. Now schedule number 9. Schedule number 9 deals with the advances. So banks are popular for advances, so it would be loans, cash credit, or overdrafts. So that should be the first one. That will be the first one. And if there is any bad debt, provision for bad debt, so that should be deducted, and net amount is to be written outside. So next comes is bills purchased and discounted. Next comes is owing by foreign correspondents. Then we'll get the total. So these are the total total advances. So schedule number 9. Next, schedule number 10. Schedule number 10 deals with fixed assets. So here we have premises. Then if there is any depreciation, that should be deducted. Then other fixed assets, there also if there is any depreciation, that should be deducted, so that we get the total fixed assets. Next, schedule number 10 deals with the other assets other than the fixed assets and the cash and Reserve Bank of India, cash with the Reserve Bank and the Bank of India, and reserve cash in hand. Here comes just like non-banking assets, then interest accrued on investment, then stock of stationery, then branch adjustments, debit side, if there is any debit balance in the branch adjustment, that should come here. Then contingent liability, schedule number 12, which is not going to be added to the total of the assets or liabilities. So contingent liability. So here we have, these are the items: acceptance, endorsement on behalf of customers. So next one is a claim for bonus pending awards or letter of credit. So these are the possible items comes in the contingent liability. So now we'll move on to one more item, that is liability on bills rediscounted. So with this we'll get the total of the contingent liability. So listen and remember all these points so that they will be helpful to you while preparing the vertical balance sheet of the company. Now we'll move on to the profit and loss account, vertical profit and loss account format. This is the format. So here also first we'll write income style. So we'll start from income, interest earned, schedule number 13, schedule number 14 with the other income, schedule number 14. With this we'll get the total income. Then we'll deduct expenditure. The first expenditure is interest expended, schedule number 15. Next one is operating expenses, schedule number 16. So that, and one more is like provisions and contingencies. So it doesn't carry any schedules, but under this heading we have two items. First one is provision for bad debt and doubtful debt. Then write it in the inner column. One more is provision for taxation. Total you write it in the outer column. Okay, then we'll get the total. Add all of these. So we'll get the total expenditure. Then we find out the profit or loss by deducting the expenditure from the total of income. So then we get the net profit for the year. So then for that profit and loss of last year, which has to be brought down here, so that should be deducted or added, depends upon profit or loss. Then we'll get the total profit. Total of these two, total of net profit and profit and loss brought forward. Then the next item is appropriations. From the current year profit, 20% is to be transferred to reserve. Then the remaining, if there is any other transfer, that should be returned. Then proposed dividend, so that we will get the total. So then balance carried forward to the balance sheet From the current profit, if you deduct all of these, you will get the total. Here this is the total deduction, and remaining is called as the current profit, and last year's profit is called as balance carried forward to the balance sheet. So we'll get the total. Okay, this is the format of balance sheet, profit and loss account. So here we have for 13, 14, 15 and 16 schedule deals with it. So we'll discuss. The first one is schedules interest and discount. What are the contents of this? The first one is interest and discount received. One more is income from investment. Then interest on balance with Reserve Bank of India. Then other types of income. So we'll add up. We'll get the total interest and discount. Next, schedule number 14. Schedule number 14, other income. So these are the types of income. So very common other income is commission and exchange and brokerages. Then profit on sale of investment. See. One more is profit on revaluation of investments, then profit or on sale of land and building and other types of assets. All this comes under other income. Next one is total, so we'll get the total of other. Then comes the schedule number 15, interest expended. Here we have interest paid on deposits, interest on RBI and interbank borrowings, then other types of interest paid, so that we get interest expended. Interest expended is nothing but interest paid. So now we'll move on to the last schedule, schedule number 16 deals with the operating expenses. You know the meaning of operating expenses. These are the various items. Payment to and provisions for employees, wages, salary, all those things comes under this heading. Then printing and stationery, advertisement and publicity, directors fees, then depreciation on bank property, then directors fees, allowances and expenses, then auditors fees and expenses, then law charges, then postage, telegrams and telephone expenses, etc. Then comes is repairs and maintenance, and next is insurance and other expenditure. If there is any other expenditure related to operating expenses, that should come under this heading. Finally we get the total. With this I have explained all the 16 schedules, 1 to 16. Listen. 1 to 12 deals with the balance sheet, and from 13 to 16 they are deals with the profit and loss account. So what you have to do is first you prepare the schedules from 13 to 16 and then prepare the profit and loss account. Then from there you can prepare schedules from 1 to 12. Once you complete 1 to 12 schedules, then you can prepare the balance sheet. Until then it is difficult for you to prepare the balance sheet. I'll repeat. First you prepare schedules right from 13 to 16. Then prepare the profit and loss account based on these schedules. Then prepare the schedules from 1 to 12. Then prepare the profit balance sheet. It's very simple. So in the next video we will discuss 1 or 2 problems related to this banking company, so that you will get a clear picture about how to solve the problems related to this. Thank you.